Welcome back. Before we take a look at the day's business news, let's take a look at the stock indices across the GCC. His Excellency Sheikh Nahyan bin Mubarak Al Nahyan, UAE Minister of Culture, Youth and Community Development, attended the 7th edition of the Middle East CIO Summit, where he delivered the keynote speech on the important role of CIOs for future development. His Excellency Sheikh Nahyan addressed more than 300 chief information officers, leaders and experts from the IT industry that had gathered at the summit. During his speech, Sheikh Nahyan stated that CIOs are required to play a pivotal role in the business world that is witnessing technology transformations. He further added that IT leaders constitute a unique class of their own, where they will be responsible for developing IT governance framework and lead the technology planning process.
CIOs will be forever confronting a new business world of tech and transformation at every foreseeable summit. CIOs move perpetually into the untraveled world. And of course, that is why these IDC summits are so important.
Among the key topics that are in discussion at the two-day summit is the emergence of a new era of computing, which the organisers, the market intelligence firm IDC, define as the third platform. According to them, customers are now demanding more efficiency from IT organisations while expecting new architectures for the next generation mobile and web applications. The surge in technological advancements are now challenging CIOs to look for new solutions to implement and are also affecting the role of IT in organisations as well as the skills set required. One of the speakers at the summit was Saadi Awainat from EMC, who stated that CIOs are now required to be more agile to business change and should be the pioneers in leading business innovation.
We are moving from a platform that consists of millions of users and thousands of applications to the third platform, which is consisting of billions of users and millions of applications. And the new platform that we're talking about, we're seeing four dominant things. We're seeing the mobile becoming the dominant way of accessing data and computing. We're seeing cloud computing becoming the default architecture in IT, and we're seeing the social media invading not only the personal aspect of our life, but also the business aspect of our life. And most importantly, we're seeing the data growing at a rate that we have never ever predicted that it will be growing at that rate.
The Kingdom of Saudi Arabia will be the country partner of Arabplast 2015, the largest plastics and petrochemicals show in the region. Arabplast 2015 will showcase the latest technologies and track market trends of the Middle East petrochemicals industry, which continues to be the largest worldwide, offloading the majority of its output to international markets. An MOU was signed cementing the relationship between Al Fajr Information and Services, the organisers of Arabplast 2015, and the Saudi Export Development Authority, a subsidiary of the Saudi Ministry of Commerce and Industry. As newly established government body, SEDA studies the development of non-oil exports of Saudi Arabia and is in charge of export development for the kingdom. Following the signing of the MOU, SEDA has booked a complete hall in the exhibition, which is set to be held from the 10th to the 13th of January next year. The previous edition of the biannual event attracted over 900 exhibitors from 41 countries.
There has been a lot of demand from Saudi companies to participate in the Arabplast, and we've seen the growth in demand the past couple of years, and we're hopeful that we are able to satisfy some of the demand. I know for a fact that we will have waiting lists for the Arabplast, and I hope that the Saudi companies find this a very useful event for them.
Saudi Arabia has shown a tremendous growth. There will be over 100 million in 2016, which is 250% growth over 2006, year 2006. So that itself shows how powerful and important industry is this for Saudi.
Currency and commodity markets opened the week on a mixed note as the recent G20 meetings in Australia drove investor sentiment. Over the weekend, ECB President Mario Draghi reiterated that additional policy measures could be employed if deflation continues to weigh down the euro area, while the British governor also hinted at future measures for the UK economy in a bid to support the ongoing recovery. To assess the upcoming week in trading, we earlier spoke to Gaurav Kashyap, the head of futures at Alpari Middle East.
Just gauging by the recent developments in the currency markets, we can just see how sensitive pricing action continues to be. We had the G20 recently conclude their meetings in Australia, and during these meetings we saw that the ECB President Mario Draghi had hinted that additional policy measures could be employed considering the current inflationary state of the Eurozone area. Now, to open off Monday's session, we did see that overall Eurozone CPI did improve to 0.8%, up from an expected 0.7%, and all of a sudden that reversed and that took the euro higher against the US dollar to close to the all-time highs of 2014 at just under 1.38. Now, what this shows is that markets still remain extremely sensitive. They are piecing out what policymakers are continuing to say, and they're trading on the data, which is why this week will be even more crucial for the currency markets. We have a host of data coming out from the Eurozone. Tomorrow we will see the German unemployment figures coming out. We have overall Eurozone GDP readings also coming out. Over from the UK, we have the UK GDP reading coming out, and this will be all capped off by Friday's US GDP reading report, which is expected to come in at 2.6%. So as long as the figures come either in line or slightly higher than expected, we can expect those respective currencies to make continuous gains against the US dollar. Overall, we expect the data to improve, which will mean that the US dollar will remain on the back foot in the week ahead. Equity markets should remain on the back foot. The sell-off from last week should continue into this trading week. Gold continues to improve on its stellar 2014 performance. We should expect to see resistance coming in at 1380 levels, with support coming in at 1330 levels. So the gold should trade within this range in the week ahead. Overall, we can continue to see further upsides in the euro and the GBP against the US dollar.